Wild headline. When I saw it, I said, uh-oh, this is bad. This is going to be really bad. Is it bad? 5% tax?
Well, I mean, look, the U.S. and China are not trading much as it relates to oil or LNG or many other commodities at this point. So it's not a huge impact day one, but the issue is that it's to me, a bit of an act of self-harm in the sense that you are making your domestic refining margin business worse. You're also, because you're having to force the refiners to buy crude elsewhere. Second thing you're doing is basically you're deteriorating the position of your refined product exporters. Remember, China exports a lot of diesel, a lot of gasoline. Now these guys are going to be in a worse position relative to other refiners around the world. And the third thing that this does, it actually sets China in a very odd position as it relates to the changes on IMO 2020. Which are coming in the next quarter. And these changes are going to favor light sweet crudes over other grades because of the way the regulation is going to work to reduce sulfur on the high seas. So effectively, China is just hurting itself by doing this. And I wonder whether this is an act of desperation or just shows that China's pain threshold is actually quite high. So it's one of the two. And I think the market is going to try to figure out which one is which, right?
Let me ask you, if China is not importing a lot of U.S. oil right now, we agree with that, then why would this really be affecting China's refineries' capacity and their margins if they're not buying much oil from the U.S.? Does this really change their price schedules very much?
Well, what's going to happen is it's going to make U.S. oil a little cheaper relative to international oil, other barrels. And we're seeing that already, which makes other refiners around the world a little bit more competitive. Now, of course, we are talking about small pieces here, but margins, refining margins are very, very thin. And refiners always work on very, very tight margins. So by putting a tariff on a commodity when you're a secondary processing unit, all you're doing is you're kind of hurting your own market. So it doesn't make a lot of sense economically to do it. But of course, the impact on day one is not that big because China hasn't really been willing to buy U.S. crude, U.S. LNG, or U.S. oil for that matter, and they're holding back in the hope of a trade deal.
But doesn't this really suggest that with the tariff that China is really saying to its providers, its producers, right, disengage from the U.S., don't take U.S. oil. Just a small disincentive to buy any U.S. oil, which in a time when the U.S. is trying to boost its global market share.
Right. They are, but remember, it's not the same thing to impose a tariff on a commodity versus a manufactured product. These are two very different things. When you're imposing a tariff on a manufactured product, like the U.S. is, you're actually bringing down the price of the global good. So in some ways, you're actually enhancing your domestic welfare if you're the world's largest economy. That's what the U.S. has been doing. It's been moving along that optimal tariff structure a little higher because we barely had tariffs in this country, about 1% for the last 30, 40 years. Now we're moving up a little higher, and that's why you haven't seen the impact on the U.S. domestic markets that much. But at some point, this is going to hurt, and I think we're kind of testing the limits here as to how the trade war kind of impacts the U.S. domestic economy.
I love your frame that this move reflects possibly active desperation from the Chinese, and that they don't have a lot of tools to bring to bear in this trade war. But it also reflects that they have very high pain thresholds, and that's one of their strengths. It kind of highlights the strengths and weaknesses of China's position. But let me throw your question back at you. And, of those two, how are you interpreting the relative importance of those two factors?
Well, look, I mean, just going back at China's history, we know that Chinese have a very high pain threshold. I don't know specifically what the pain threshold is of the Communist Party at this very point in time with the whole Hong Kong situation unraveling. But historically, China, we look at the Great Leap Forward or other events throughout history, they've had a pretty high pain threshold, and they've also had a very long time horizon. So I'm a little skeptical that we are going to see both sides come to the table over the next week or two and resolve this trade war. I just think that China's rising and it's challenging the status quo, right? So they're going to be pushing on their end.